So once again we welcome all our friends. In today's video we are going to talk about a chart pattern called head and shoulder. So before starting the video, please subscribe our channel to watch technical analysis video first of all. So every trader should know about it, how this chart pattern made and what's its indications. The head and shoulders pattern forms when a stock's price rises to a peak and subsequently declines back to the base of the prior up move. Then, the price rises above the former peak to form the nose and then again declines back to the original base. You can see in the picture, is head and shoulder pattern bullish? In terms of technical analysis, the head and shoulders pattern is a predicting chart formation that usually indicates a reversal in the trend where the market makes a shift from bullish to bearish, or vice versa. People also ask, when should I buy after head and shoulders pattern? In the head and shoulders pattern, we are waiting for price action to move lower than the neckline after the peak of the right shoulder. For the inverse head and shoulders, we wait for price movement above the neckline after the right shoulder is formed. A trade can be initiated when the pattern completes. So thanks for watching this video. If you don't miss other technical analysis videos, please make sure to subscribe our channel.